Well, retail sales rose 0.4% in March, but is that a sign of expansion or merely the result of higher consumer prices? Here to help us break down the trends is Michael McNamara. He's Vice President for Research at MasterCard Advisors SpendingPulse. And Michael, I know you're tracking what the consumer's actually doing at the pump and at the cash register. How do you describe behavior in March?
Overall, retail behavior in March generally came in not as bad as folks expected when you consider that there was an Easter shift. The weather was not terrific across the country, especially on the weekends. And you also have this gasoline story of gasoline prices going up rather dramatically, taking money out of consumer wallets. So besides those headwinds, sales are still actually looking all right.
So talk to me about the gas prices, though. How much are they skewing, maybe the government numbers we saw today or the perception of where the consumer actually is?
Well, the couple of things with gas is that we've started to pick up. We have a way of calculating how many barrels of gasoline the country pumps every week. And generally there's a tipping point when gas prices nationally surpass about $3.25 a gallon. That's when you start to see impacts on consumer. They start to pump less, they start to drive less, specifically going into weekends. So that tends to be weekends tend to be your heavy day, especially Saturdays on retail sales, and that can start to impact brick and mortar sales as folks start to pump less and drive less going into the weekends.
So you could say that the higher price of gasoline is causing demand destruction. You're seeing it in the data you're looking at.
Yeah, demand destruction more specifically. Last week, the country pumped about 3% less gas than it did same week a year ago. A little bit of a Easter impact in there, but if you look at the last 4 weeks, the country pumped about 1.9% less gas than it did during the same 4-week period a year ago. 6 weeks in a row, we've seen year-over-year declines in pumping. So some significant declines. Again, you'd expect them as prices maintain above about $3.50, $3.60 now.
We keep asking whether that increase in inflation for what the consumer purchases with food and at the gas tank is whether that's going to stall out spending. I mean, historically speaking, where is that danger level? You said it's $3.25 per gallon at the pump, but on the food front, on the other inflationary areas, how close are we to real impact?
Well, it takes a little bit of time, I think, for a rising price environment to really change overall consumer spending. But some areas that you might want to pay a little bit more attention to in this kind of a commodity inflation environment, you want to pay attention to areas such as restaurants, casual dining, for example, especially folks cut down on how much going out to dinner they do. You want to watch out for auto parts and services, obviously, as folks drive drive fewer miles. They don't need as many oil changes or tire changes. Also, watch travel-related sectors, especially hotels that rely on highway traffic. You want to watch out for that as well. Those tend to be the areas that you see the most impact.
When we look at the purchasing patterns right now and looking at the retail data, 10 of the 13 major categories showed gains last month.
Yeah.
Biggest increase in furniture demand since 2004. That seems counterintuitive if we're still seeing such weakness in the housing front. People are investing in their own homes.
Yeah, let me just put that into a little bit of context, at least based on some SpendingPulse numbers. We've been seeing about 4 or 5 months in a row of increases in furniture spending, year-over-year increases. But to put that into context, furniture is still about 16–17% below where it was back in 2006, 2007. So you want to be a little careful on overreading a year-over-year growth rate in that particular category. It still has a ways to go before it comes back to where it was.
Certainly, if it does come back to those levels. But you're also seeing strength in electronics. Is that real strength?
Well, not too much strength in electronics. I'm seeing a lot more strength in the e-commerce channel. A little shift from brick and mortar to online. Electronics, showing a year-over-year growth, but it's after a couple of months of pretty lackadaisical growth in the electronics category. But that shift, which might be related to these higher gas prices, changing the way the country shops, shifting from brick and mortar to online spending. We saw growth in March of over 16% online.
And yet, for those retailers themselves, they still have to pay for transportation costs. So, I mean, is it a clear benefit to say that higher gas will benefit the e-commerce arena?
Well, we saw that if you take 2008 as what we learned back in the 2008 price spike, we did see a population of folks adopt online spending a little bit more aggressively. I think you can probably look back to some of the lessons we learned in 2008 regarding consumer spending, and we're seeing a bit of a repeat of that in 2011 so far. So I think we are already seeing increases in e-commerce spending, and you'd expect that to continue.
All right, Michael McNamara, I know you track actual transactions and the research there for MasterCard. I appreciate your analysis.